talk to me about how this will affect real estate from a building standpoint, a transaction standpoint, a market specific like regional market standpoint. What's your take?
Yeah, so I think different regions face varying levels of risk. We have the auto sector, Alberta's energy industry, which oil hasn't been subject to tariffs yet, Quebec's aerospace sector, BC's forestry industry, and all of these are kind of particularly exposed to tariff impacts. And we're going to dive into these a little bit more. Construction material dynamics, it could end up, if the US does start producing a lot of their own stuff, we could end up with a surplus of materials in Canada, and basically we're buying all of our stuff in Canada, which could
I
actually,
was gonna say, hey, can we build more houses in that case?
well, I
Ideally.
mean, this could end up delivering us the housing outcome that we always wanted, but it could come at the cost of our economy being in a really rough place. And we're gonna talk a little bit about this, but um, the last piece is that real estate investment implications. The uncertainty from trade wars could actually drive more investment into real estate as investors seek safer hard assets, getting out of businesses which are a lot more vulnerable, potentially making the sector even more crucial to Canada's economy. Which, again, look, that I'm genuine when I'm saying this, like, because we stand to benefit a lot if Canada gets more exposed to housing. I don't think that is a good thing, by the way, for Canada's economy. If I haven't said that enough times, we need a more diverse economy. We need to rely less on housing. But is it a likely outcome that the government basically pumps out a bunch of make work projects, does a bunch of infrastructure spending, tries to keep the construction sectors employed through housing productivity, more foreign capital going into Canadian real estate? Yeah, I think that's probably it. Look, it's for the past 30 years, it's the only way they've known how to get out of the problem. Turn on the printers and build the houses, right? I don't know if it's going to work, but it is a likely outcome.
Yeah. Okay. Well, let's talk about the building of the houses, as you just said, right? And let's do a little bit of a deeper dive into the actual nuts and bolts and screws and nails that are used to construct all the few million more houses that we need. And with these 25% tariffs, Canadian lumber, steel, and other building materials have become much more expensive for that U.S. buyer. This has reduced U.S. demand for Canadian suppliers that may have that excess you were just referencing that they now need to sell. And to move that inventory surplus, suppliers will likely have to reduce prices, which again could have a bit of a mixed bag or unknown kind of impact on the domestic market at this point. And the potential result being that construction costs in Canada could actually decrease as material originally destined for the U.S. exports gets redirected to local markets at potentially discounted prices. Now, again, for all you listening, this is purely theoretical at this point, but this is a way that it could play out. Okay, now this creates an interesting opportunity. Well, the broader economy might face challenges from tariffs. The construction sector, which Dan, we've talked about so many times, right? We've got the massive amount of people retiring. We've got all the inflationary costs built into the construction materials that it takes a need to build a house. So the construction sector isn't in the greatest shape right now. It's under a lot of stress. And this could actually benefit it from lower input costs, potentially offsetting some of the negative economic impacts, or at least in the short term. Again, theoretical, but an interesting way to look at it.
Yeah, we've talked a lot about brutalism on the show, or like not a lot, but a couple of times. The
Brutalist
brutalist.
architecture, buildings,
Yeah,
yeah.
and so this kind of reminds me of Canada's previous response to economic challenges, like from the '70s through the '90s. Those massive concrete government building projects, where you had, think about, like, you go to any university campus, any government building, there's always at least one concrete brutalist building. And during the past economic downturns, there was the government basically pouring money into these massive concrete structures because you were making them out of Canadian concrete. Robarts Library in Toronto,
Great
National Art
example.
Center in
Yeah.
Ottawa,
Half the buildings on Bay Street.
yeah, Simon Fraser University in BC. They're all examples of how that, the Canadian government used construction to keep people employed during tough times. But they did more than just create jobs, right? They kind of became these like really iconic standout buildings as well. All of this to say that I could see something like that taking place. We've got a lot of urban economies in Canada that need better infrastructure. Like the city of Toronto is a great example. And I think Canada's uniquely positioned in such a way that, like, look, I'm not going to sit and say this doesn't suck, by the way. Like, this is obviously a very, very horrible setup, and I'm trying to find a silver lining, which is rare. I never do that. I'm
I
usually the
know.
one saying it
I'm
sucks. And
impressed.
now we finally hit peak suck. So I'm like fully contrarian here. I'm like, no, guys, let's be cheery
Yeah,
about this,
it's
right?
okay. It's not that bad.
But
I
let's
like it.
actually look at
This is
like,
an unexpected turn
but
for the
you know,
better.
we have everything that we need to build houses, or like to do this. If we need to do infrastructure, build more houses, etc., what happens is we have to print more money. We don't have enough money to do it because we've been running a deficit, Canadian dollars weak, etc. Um, but they would probably increase the money supply to get it done. The challenge becomes what sectors actually get impacted of us exporting, right? And so if we look at the top US imports from Canada, we're going to look at first, I'm going to just look at the top, and then we're going to dive into construction materials that could end up not going to the US anymore, that we'll end up maybe with a surplus of. So we've got number one, oil and gas by a large margin. And then we've got number two is transportation equipment, and that would be like, I think, a lot of your like planes, etc. And here's the other thing is, like, we don't export a lot of finished goods, right? We export like a ton of like auto parts, as an example. You know, pieces of these things. So like that 25% markup that now the US is feeling is now just getting included right in their supply chain. Primary metals for manufacturing, 35 billion. Chemicals, food products, machinery, petroleum and coal products, wood products, which is going to end up on the next list, plastics and rubber products, and paper. Those are our top imports from Canada to the US.
Okay, let's go a little deeper. What if we look at the key construction material imports from Canada? This is a list from 2023. We've got softwood lumber at 8.9 billion, steel and associated steel products at 6.2 billion. This is USD, by the way. Aluminum products 7.4 billion, cement and concrete products 1 billion, insulation materials 890 million USD, glass and glass products 720 million. So the total construction related materials from Canada represent approximately 25.3 billion USD in annual trade, making it one of the most significant categories of imports from Canada to the United States. So, if all of those things just got 25% more expensive in the US, well, they're probably going to buy it from a US supplier and save themselves the money. And if they stop buying from those Canadian suppliers, we could have a lot more of those projects, a lot more of those supplies and products here to do what we ideally need to do with them.
And that's the big question, is will they stop buying from Canadian suppliers? And I think the whole thing really comes down to cost, or the economics of these goods. So let's break down how this 25% tariff actually impacts trade when accounting for currency exchanges. So starting value, let's say you're buying $100 worth of goods at 79 USD to Canadian dollar, the old rate, it was 79 USD. At 79 cents USD to CAD. If at 70 cents USD to CAD, it's $70 USD. A 25% tariff on $70 USD is an extra 17.50 USD on additional costs. So the total cost with the tariff is 87.50 USD. This means that even with the 25% tariff, the weaker Canadian dollar makes the final cost to American buyers only about 11% higher than it was, a year ago when the Canadian dollar was closer to 80 cents. This demonstrates how the weaker Canadian dollar acts as a natural cushion against the tariffs. And obviously that cushion is about to get a lot softer, I would expect, based on, what's happening in the currency markets right now. I think so, like we're Wells Fargo's of the world are expecting like a 65-cent Canadian dollar. So, if you stretch that even further, you go to 65 cents USD, 65 cents. So that brings you $65 USD. 25% tariff on 65 USD is only 16.25. And the total cost with the tariff is $81.25 USD, which is, really only like a little bit higher than what it would have been. It's $11. If that ends up being cheaper than them producing it in their own economy, which is probably the case, otherwise they wouldn't have been buying it to begin with, It kind of further demonstrates how currency depreciation could effectively neutralize most of the tariffs' intended impact on trade, though at the cost of higher domestic inflation in Canada due to more expensive imports.
Okay, so if I'm following all that, it sounds like a lose lose, but because we're losing, we lose less a little bit. It's
Well, it's gonna like we're toast because we get the opposite of that. Like if we have to buy at a weaker Canadian dollar, plus we have a 25% tariff on US
yeah,
goods. So like a lot of the stuff, and we're gonna go through the list of like a lot of the stuff that we get from there. But like your fruits and vegetables, as an example, like hey, we only have a climate to grow that stuff for a couple of months a year. So
it's all right. I guess
not
carnivore diet it is.
not looking optimistic for Canada to get stuff like that as an
Yeah.
example. Like you're like, and that's where you mentioned orange juice, right?
Yeah. Okay. Well, let's look at some of those economic sectors that would be impacted in Canada, and let's look at from a real estate perspective, Dan. Right? Location. Cities and provinces that would most be impacted by those sectors that are potentially impacted. Um, the first one is the automotive industry. All right. Supply chains, highly integrated supply chains between Canada and the US, but with the automotive parts, and tariffs would just raise vehicle prices and parts, and of course could threaten jobs, etc. The energy sector, specifically oil and gas extraction and refining, manufacturing sectors like primary metals, chemicals, machinery, aerospace, agriculture and food production that could affect the prairie provinces and a lot of other food production facilities, chemicals and plastics, and of course, overall across the country in every market, mid, small, or large, small businesses will be affected, particularly those in retail, hospitality, and distribution. Which, to be honest, is the thing that pisses me off the most about this whole thing is that it's going to be the small entrepreneur that likely takes the biggest hit. Now, this impact on these sectors is predicated on the assumption that tariffs will be a broad and significant, potentially leading to broader economic factors, and really, finally, maybe people admitting that we're in this recession that we've kind of been tiptoeing around and dancing around with for, at this point, it feels like years. So, Dan, talk to me about some of the actual areas. I just told you all the sectors. Where are those? Let's go like province for province, or kind of divide the country up,
Yeah,
and tell me what is going to
sure.
happen in some of these markets.
So Ontario is particularly vulnerable in the automotive sector, with cities like Windsor, Oshawa, and parts of the GTA heavily dependent on auto manufacturing and parts production. I'm going to mention a couple of examples later in the episode, but the manufacturing corridor from Toronto to Windsor would feel significant impacts for sure. The energy sector dominance in Alberta means cities like Calgary, Fort McMurray, and Edmonton could face significant challenges if oil and gas exports are affected. And there's been talk about like a retaliatory export tariff, which would be like, I can't see that happening, but the U.S. government hasn't put tariffs on oil, obviously, because we mentioned it earlier in the episode. It's like it's what by and large the biggest thing they buy from us, so they're not going to slap a 25% tariff on that one. Quebec's aerospace industry concentration around Montreal makes it vulnerable, especially with companies like Bombardier. The province's aluminum sector, particularly in the Saguenay region, could also face challenges. Atlantic Canada, food production, obviously, seafood processing industry could be impacted, affecting coastal communities and major processing centers. This is particularly relevant for New Brunswick and Nova Scotia. In British Columbia, the forestry sector, we talked about the softwood lumber earlier, particularly in interior communities, could face challenges. Port of Vancouver's role in international trade could see reduced activity, which would also affect the lower mainland's economy. So if Trudeau's putting this 25% tariff on US goods, we also want to look at what those are to see if we have any risks
Hmm.
of inflationary impact. Like that, literally your prices are going to go up 25%, like in a couple of days for said goods. So, let's look at that list
Yeah,
too.
I honestly,
This is one of those apps,
I don't even
eh?
want to like read this stuff, man. This is some of these
Yeah.
lists are just the numbers, like the size of these are. I mean, it's great when you see the size of an industry, but then when that side when it's correlated
Can you
to
add 25% to that and
it's-
assume it's a tax that's going directly to the government?
and not
Like,
to mention after like years of like getting through a pandemic and then inflation and then like real estate prices everywhere,
yeah.
now it's this. It's like, can we just take a freaking break? Like 2025,
May,
maybe 2026, everyone will just be like, let's just chill for a second. But
may you live in interesting times.
yes, I'd rather not. Before we, yeah. So, anyways, back to the list here. So, these are the top U.S. imports to Canada. Again, Dan, we're referencing 2023 data here is the most relevant data we could find. Vehicles and